Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm going to start the new topic, that is incomplete records. The last video I have completed the topic of irrecoverable debts. So I have explained, we have done so many problems on irrecoverable debt. Now in this video I'm going to explain you completely the theory regarding incomplete records. So before starting the topic, take a screenshot of the notes which I have written on the board so that you can have a permanent record, a permanent copy, so that before examination you can revise and write in examination. So take a screenshot, then I'll explain. Come on, now I am starting the topic of incomplete records. Normally every business will maintain complete recording system where all the transactions are first recorded in books called original entry. Then later on the transactions will be posted from the books of original entry to ledger accounts. And this cycle, this process will continue throughout the year. At the end of the year, trial balance will be prepared, income statement, statement of financial position will be made. This is the normal procedure. But there are few businesses which do not maintain complete set of records. Roughly they will maintain, randomly they will maintain the records. So those business organizations are small sole trading concerns. Normally large business organization, they have to keep complete system of bookkeeping. Complete records they will maintain, but small petty businesses, they will not maintain the complete recording, incomplete records. So how to find out the profit when a business maintains incomplete records? That's what we are going to study in this chapter. First of all, I have written here, some businesses does not keep full set of accounting records. Small business, they cannot afford, they cannot appoint an accountant, they cannot spend a lot of money on books like ledgers, journal, all those things. So they will keep random recording of few transactions. All the transactions will not be recorded. Now there are many small businesses who do not keep a full set of journals and ledger. For example, a sole trader, they will not follow the complete principles of accounting. So normally when a business have to implement full-fledged accounting, they have to follow the accounting principles, accounting rules, accounting concepts. But these small businesses, houses, sole trading concern, they will ignore the accounting principles. They will not follow all the rules of accounting. They will not open all the accounts. But still they want to know whether the business earned profit or incurred loss. Every business, whether it's a big business or small business, every businessman wants to find out whether we have earned profit or incurred loss during a period of time. At the same time, the business wants to find out what is the financial position of the business on a particular date. So without having complete set of records, how we can be able to find out the profit? That's what we are going to study here. Now, what are the features of these organizations where incomplete records are maintained? First of all, only cash book and personal accounts of customers and suppliers will be maintained. Normally what will happen is a cash book will be maintained and all the accounts of customers and supplier will be opened. Apart from that, no other accounts are maintained. Real accounts and nominal accounts are not maintained. Only few personal accounts and cash book is maintained. Remaining all the nominal accounts and real accounts not opened. Next one, not possible to prepare trial balance. When we don't have all the accounts, when we are not following double entry system of bookkeeping, we cannot be able to make the trial balance, to check the arithmetical accuracy. The last one, not governed by any definite rules in maintaining the accounts. Like we have all the principles of recording, those principles, rules of accounting are not followed. These are some of the features of those organizations which keep incomplete records. Now, limitations. This method is a defective method. Actually, if you want the complete advantage from accounting, then you have to maintain complete records. You have to follow the principles, rules of accounting. Then only you can be able to get the complete benefit. Otherwise, if you keep incomplete records, definitely there will be some drawbacks, disadvantages. What are the limitations of keeping these incomplete records? First of all, trial balance cannot be prepared. The purpose of making trial balance is to check the arithmetical accuracy of the books of accounts. When we are not maintaining the accounts, no trial balance can be prepared. When no trial balance is prepared, we cannot check the arithmetical accuracy. Secondly, in the absence of real and nominal accounts, we cannot be able to make the income statement. We cannot be able to make the statement of financial position. So no income statement, no statement of financial position can be made. Thirdly, there is considerable scope of fraud and misappropriation. By keeping full-fledged accounting, the probability, the possibility of fraud, misappropriation will come down. But when the accounts are incomplete, then definitely there is a large scope of fraud or misappropriation that may happen in the business. Next, this method will not be accepted by government departments like income tax, sales tax, or a number of government departments will control the business, will apply some rules and regulations to the business. So accounts prepared from incomplete records will not be accepted by government departments, and even in a court of law, the court will not recognize the accounts from incomplete records. Last one, not possible to raise loan from financial institutions. Nowadays, the business organization will depend on banks, on financial institutions to get the loan. But if a business is keeping incomplete records, no banker, no financial institution will come forward to give the loans. So these are some of the limitations of those organizations which keep incomplete records. Now, ascertainment of profit. Now we are coming to the main point. How a business can be able to ascertain the profit if the business is having incomplete records. Now, profit earned during a period is ascertained by comparing the capital in the beginning and capital at the end of the year. First, there are two methods of ascertaining the profit. The first method is called comparison method. Comparison method means we are comparing the opening capital with the closing capital. By comparing capital, we can say whether the business has earned profit or incurred loss. Example, a sole trader has started the business by investing rupees 1 lakh on 1st January. On 31st December, his capital was 1,20,000. The beginning of the year, he has invested 1 lakh. End of the year, his capital is 1,20,000. How the capital have increased? There may be possibility that the business has earned profit. So when capital increases, there is a possibility the business has earned profit. If capital decreased, then we can say the firm may incur loss. So by comparing the capital of opening and capital at the end, we can be able to find out the profit. Now the capital is ascertained by preparing a statement. That statement is called statement of affairs. By making this statement of affairs, we find out the capital. So we need to make two statement of affairs. One statement of affairs at the beginning of the year, another statement of affairs at the end of the year. To find out the opening capital and to find out the closing capital. In examination, very frequently they will ask a question regarding what is statement of affairs. Statement of affairs is a statement which lists down the assets and liabilities. On one side we take all assets, on the other side we take all liabilities. The difference between assets and liabilities is the capital. So accounting equation you know already, capital means assets minus liabilities. The total of assets minus total of liabilities will get the capital. That is the purpose of making statement of affairs. Now the profit is ascertained by making a statement. So how to find out the profit earned during the year? easily we can make the statement like this. Capital at the end of the year. We start with capital at the end of the year. To the capital at the end of the year, we add back drawings during the year. If the owner has withdrawn the money from business for personal use, it is called drawings. So if there are drawings during the year, drawings will be added to capital at the end of the year. So capital at the end of the year, add drawings minus further capital introduced during the year. If the owner has introduced some more capital during the year, further capital introduced, that should be deducted. Then we deduct capital at the beginning of the year. Opening capital we deduct. The resulting figure is called profit earned during the year. Simply again I repeat, take the capital at the end of the year, add drawings minus further capital introduced minus capital in the beginning of the year, will get the profit. That's it. So this is the easiest method of finding out the profit. But this is not the right method. The superior method is the second method of finding out the profit. The second method is called conversion method. Conversion method means we are converting the incomplete records into complete records. That means whatever missing accounts are there, we open the missing accounts. We convert the incomplete into complete system. After conversion, we can be able to prepare the income statement and find out the profit as usual. Then we can make the statement of financial position to find out the assets and liabilities as usual we'll make. So this method is more superior than the comparison method. So what is there in conversion method? In this method, we make the income statement and statement of financial position from incomplete records by making certain adjustment and preparing certain accounts. So what we need to do? We have to make the adjustments and we have to open some accounts and convert that incomplete system into complete system. Then all necessary books and accounts should be opened and all transactions should be recorded in the books following double entry system. The following steps are required. So what are the steps required to convert the incomplete into complete system? First, if capital is not given, it is ascertained by preparing statement of affairs at the beginning of the year. Some cases, beginning of the year, capital is not given. So we make a statement of affairs to find out the capital in the beginning. First step. Second step, cash book should be prepared to find out cash and bank balance. Sometimes both are given but some other items are missing. We open the cash book to find out the cash and bank balance. Sometimes cash and bank balances are given but some other items are missing. So to find out that missing values, we have to make the cash book. Then third one, trade receivables account should be open to find out the sales revenue. And trade payables account should be made to find out the purchases. The purchases can be found by preparing trade payables. Sales revenue can be found by preparing total receivables, trade receivables account. After ascertaining the above, we can make the income statement and statement of financial position as usual. So after making so many accounts, after making adjustments, we can be able to make the income statement and statement of financial position. That's all. So this much is there in theory regarding incomplete records. In the next video, I'll start the problems on incomplete records.